Hello everyone, welcome to the Candy Forex session. I'm by the names of Muhumuza, Sedrack. And today we'll be breaking down the market as we continue to show you how the market works. And luckily enough, we've been in a week of fundamentals. Many people have been always complaining, or you've been always having that instinct in you that it's too hard to trade the news following the market structure, and today it's what we are going to talk about. In today's session, I think we'll be tackling the GBP USD, gold, and USD JPY as we see how the market had to work out in this session, because we've had the CPI, we've had the NFP and the PPI now. So we want to see how did the market coordinate with the market structure. And to those who know how to break down the market, I know you've made a fortune already and you're now enjoying. So to those who feel like it wasn't your lucky day, now let's break it down as we get to understand, learning has no end. And each and every time we learn new stuff. So I hope we can now forward and go to the charts. So in today's session, we shall start with the GBP USD. The GBP USD, let me first clear all this. Then with the GBP USD, we are going to map the structure together. And what do we do, or how do we start? To those who do smart money concept, you're going to get me better on this. So we are going to start by mapping out and know what do we have to, what's the main thing when we are finding the trend. First thing when you're mapping, you first have to know the trend. Where is the trend going? And as we can see, we all believe that we are in an uptrend on the GU, and it's been days when we are in an uptrend. The dollar has been weak for some good time. Now, here as we can see in the daily chart, we are seeing some market exhaustion, like the market is now at its peak and we are looking for some downtrend. Like for now, if you were to see the overview, the market is like it's now exhausting on the buy trend, like the buy trend that has taken some good time. Now we will start mapping from the daily. We will do some simple structure mapping, and then we go down to the 15-minute as we see how the week had to work out. Now, into this, in this session, we can see here the market had made we shall start by spotting this. Here we can see it was a break of structure, and the market broke two sides, but here we have to find the order block and see what caused this move. Like if it was an uptrend, what caused the uptrend? If it was a downtrend, what caused the downtrend? We all know that if the market pushes down and it breaks the structure, the high is confirmed. We still have our protected high that was not broken. If this high was broken, we would be still looking into, we will still be looking for buys on GU. But Fortunately enough, it didn't. Now what we are looking for is to see how the market will work out in that lower time frame. This is this can be our weekly high or our daily high, but we'll just call it the protected high. Then we dive deep into the 4-hour time frame. In our 4-hour time frame, you will see that we have a clear order block here. On the extreme, we had our order block, and the market had already mitigated it. And right now, the market is not giving a clear info on that, but if we are doing the structure mapping, we will see that we will start from this. This was our decision order block. We expected market to come here since it had broken structure previously on this zone. On this zone, this was a break of structure. So we expected market to respect this, but after this being broken, to all those who know how to use the order block, we know once it is violated, it becomes a breaker block. So here market respected, it broke through and it came back and retested it. So it continued the uptrend. And we all know whenever market breaks the decision order block, it continues, it will always continue to the extreme order block. Remember, there is always that order block that is in the middle. Let me spot it out. This one here. This is, some people will take some trades here, but in every case when this happens, remember they are using this order block to come and mitigate the breaker block. So this was our decision that was broken. When market went through it, it came and retested, then went to this is called SMT trap. To those who do SMC, who have done the advanced class, you can understand what I'm saying. It is the SMT, the smart money trap. So many smart money traders will enter in here, and most probably many will do this. Once they are trapped, they will want to swing from here to here, and that in most cases can never work out. So remember, they've been waiting here and things didn't work out. It broke through and they are now into this zone. So this is always an SMT, but to a trader who knows very well the market, you can always bring it to this. Let me zoom in. When I zoom in here, you will see that after the market coming back to retest the 50%, it retested the 50% of this order block that was violated, and it became the breaker block. It came and mitigated, it's 50%. So here you're not supposed to take a trade that will exceed this order block, because there, like love it or not, your stop loss will always be hit. So it does not have to go beyond this, because here we can see this is an order block that has to be respected, and as we can see here, it was respected. Then market went further and broke the structure above, confirming the upper trend. It made another break of structure. So after breaking the structure, we expected, remember, this is our inducement here. Let me mark this. This was the inducement we had. It was broken, and this is the move that caused the break of structure. And market didn't leave behind any inducement, like it didn't make any leg. So after it made a leg here, after breaking in here, after this high was broken, like it was swept, but when we are mapping here, we will confirm the low. Like this low now here was confirmed. After this was violated, like after the break of structure, this low was confirmed, and after this move, after it's sweeping the liquidity, this was confirmed as a high, as our new high, and this one here my bad, this one here was confirmed after it caused the move that swept this one here. But remember, this one was just swept, and this at the moment was the inducement we had. This one was the inducement we had. After it sweeping here, it became the inducement. Then, to those who know how to use the wicks, you will understand that they will always come and mitigate and sweep out this liquidity. Like here, we still had some liquidity. That was later swept, and here you can always take a trade from this part. Remember, this here would be our inducement. Then after this, you take a trade. Let me first clear this so that we can see what I'm talking about clearly. When you're taking your buy trade, you can always take it to the previous high. To avoid losing the money you've been like the little you've got from the market, always target for the immediate high and the current highs and the current lows, because market will always come to sweep. Remember, market moves in two patterns and it's always sweeping. Now let's talk about what happened this week. The NFP here, it swept. It swept following this structure. Let me now clear this. It was following structure. Let me break this down so that we don't waste much of our time. This was our inducement, and this here was our choke, because the market had already broken this side. We were expecting it to go further up. Then this was our inducement. After the inducement was taken out, the last lower low, like the lower high, sorry, it was when it is broken too. Like this is our IDM, our inducement. Then this low, because we didn't expect market to come below this, when it was broken, automatically it was a change of character or market shift, like the structure shift. So here, this was the previous week before the NFP. Then when market came, we expected market to come and mitigate this order block, because it was our extreme order block. But remember, they say we always have to protect our stop loss. Now here is the trick. Today I'm giving you this trick. Please always try to follow it. Instead of always taking the full order block, you can always take the 50% of it. Then as you're protecting your capital, and try to give it some bigger stop loss. Why? Market always, like, they expect many SMC traders and other traders having their stop losses above. What they do, they always sweep both sides. So they first sweep, like it, you can call it like a stop loss hunt or a liquidity sweep. So in most cases, if you had your limit, because others had their limits in, you can, when you protect, like if you give it time, like if you give it space, you will always protect your stop loss. And the target was our low, like this low. And NFP took out the TP. This, remember, I told you that you should always put your TP to the lower high or the lower low if you're buying. So when you're selling, this is the lower high. It's where you have to put, like, this was our, after the market choked, this was supposed to be our entry here. Then the market came down. You see, it worked in the favor of the structure. Then here, when you look into the CPI, how did CPI work? Here we can see that down here we had our order block to the extreme. Remember, this was supposed to be our decision order block. This was supposed to be our decision order block that was violated, and this was our extreme. So this is, on this extreme, they mitigated it and choked. and after choking, we expected the market to go higher. The market kept on, it came back and had to mitigate this. It kept on going higher and higher. So here, when you look into this CPI, it came and it hit in favor of the market structure, because the market structure had already shifted from sells to buys. So whenever you're following your market structure, you don't have to worry about the fundamentals. Now let's look into the gold. Then on gold, I'll be so quick on this because the other time, like on the GBP, I just wanted to show you much deeper so that you can add up and see how you can use it or apply it here. So here we can see the market. Like this was a clear break of structure, and I'm now going to show you where I expect the market to go for some good time. So I see here the gold had to mitigate this, and it had swept, it choked, then it came again during the fundamentals. Remember, it had to come and mitigate this, and this was mitigated. When we look into the lower time frame, we see that this has already choked, but I'm expecting it to first come and sweep liquidity. Like whenever the pair is going to change, like in a higher time frame, like when it's a change of trend, they will always come and sweep. So I expect the market to come and sweep lower. After sweeping lower, because it has already choked, this is what we wanted to see. Here it has swept the engineered liquidity. Then, before we confirm the change of the main trend, it has to come and sweep this, because this is the, right now it is the protected high, and this is the protected low. Now, in case it comes and sweeps this lower, we will be expecting for more sells. Then if it comes, because it might fail to come and sweep this for us to confirm the change of character, it might use this high. By the way, this is not yet a high because it hasn't swept anything, but in case it comes and sweeps below, this will be our choke level. Like this is where we will confirm the change of character from. In case it comes down, and sweeps this, then and it comes higher, like this here, and then it goes up. Here we will confirm our buys, like it would have changed the trend. But if it, in case if it comes, this is just in case if it doesn't break below here, but if it comes and breaks below and it closes below this protected low, there we will be looking for sales in the next trading sessions. This is what we'll be looking for. Now, as the week is ending, we will be waiting for the next week to see how the market plays out. But most probably it might sweep this, then it comes and chokes from here. Or if it continues and chokes from here, then we'll be looking for buys. So that was my overview about the gold. But most probably I expect it to go up because it broke structure above. Then it might come and retest this side, then it goes further down. But for now, this is what we see. We shall keep in touch as we get to update. And do not forget to subscribe to the Candy Forex channel. We will be always posting in these updates. Then I recommend you to make TBS your #1 brokerage company, because whenever you deposit $5 and above, you're given 100% deposit bonus. And how does that bonus work? It helps you just in case, like it gives you extra $5, and guess what? You have $10. So that helps you with your trading. And till next time, I remain Muhumuza Sedrack. Nice time.